There we go. Yeah, so we're going to talk about DOPEX as the protocol for today's spotlight. And basically what I've been trying to do is I've been trying to find protocols or projects that are, I think, pertinent to the current market cycle that we're in. So if you recall last month, we spotlighted Anchor Protocol. And the reason that we were talking about Anchor Protocol is because, of course, Anchor Protocol yields like 19.5% interest APY a year, right? So 19.5% APY. And I thought that would be very useful in terms of stablecoins. So all you got to do is hold a stablecoin, UST, so that's the Terra, stablecoin, and you deposit that, and you can yield 19.5% yield per year. And I thought that'd be very relevant in a bear market because, last month, I think as I said in our call, that I was pretty sure that we were now in a bear market, and time has certainly shown us that. So in this month's spotlight, I decided to go with another protocol, which I thought was very pertinent for the times. So using options, we can either A, hedge our bets or hedge our book. So if you're long a bunch of Bitcoin or long a bunch of ETH, then you can buy puts on it. Or if you think the bottom is in, you can sell puts, right? And then not just collect the premium, but potentially be allocated that strike price. If this is all Latin to you, then we'll get to it later on in the deck. But get a chance to basically buy that token at that strike price should it break below that strike at expiry. Now, if that's new to you, then we'll talk more about that during the session. And then finally, we'll do some resources and then some questions and wrap up. All right. So that's the agenda for today. Hopefully you guys get all that out of it. Before I launch into things, though, definitely want to make sure we talk about that final tagline in the agenda slide, and that is, everything we talk about here today is for informational purposes only and not financial advice. DeFi is very risky, and you can lose everything you put in. So DeFi, is what I would say on the far right-hand side of the risk spectrum. Right? So certainly do not take this as financial advice. Please do your own research. Good luck finding a financial advisor who's going to give you any smart investment advice on this stuff. but certainly do talk to your partner, your boyfriend, your girlfriend, whoever is your trusted confidant before you invest, your dog, whatever you got to do before you invest in these protocols, because there's a lot of risk, but at the same time there's a lot of reward, and I really believe that we are in very, very early innings of the DeFi space. And I think we said in the last month's meetup, I would basically say, I would relate our current time frame to being something akin to 1998 in the tech space. Before we had the big 2000, bubble, before all the companies started to blow up. I think right now the DeFi projects, this is where we're at, like 1998 pre-internet, so pre.com. That's where we are now. Okay, so any questions before we jump into the agenda and launch into things? All right, checking the chat here. No? All right, so let's go through it. And as I mentioned, sorry, I think this is your first call. Definitely, please ask me any questions as you see fit. I'm going to do my best to look at the chat. I have another screen over here which I'm looking at to check the chat questions. We'll have questions at the end, so if you do want to save your questions, you can certainly do it there as well. But feel free to. I don't want to just be up here and just on my sort of on my soapbox and talking the whole time. So if you have any questions, feel free to ask. And at the same time, this is all being recorded, and I will send out the recording of this presentation with the PDF of today's slides tomorrow morning or tomorrow afternoon. Okay? All right. So let's launch into things. I don't see any questions, so let's get right into the meat and potatoes. So who am I? Well, my name's Houston Trong, and I'm a full-time crypto trader. It's kind of weird to say because I used to trade equities for many, many years. So I think I started trading equities. How long has it been now? Boy, I don't remember anymore. So I first started trading in 2007. But I didn't go full time until 2000. What's it? 7 years now? 8 years? Yeah, it's 2014, something like that. Time flies now. Yeah, it's amazing how fast time flies. But yeah, I used to trade equities and options exclusively, and futures, of course. But late last year, early Q4, late Q3 last year, I made the switch over to crypto, and I haven't looked back since. Crypto is just so much more opportunity. There's so many more projects, and you're getting on the ground floor. I've talked about this many times. Why I think that this is the space to be in now, especially for people who are maybe retail, institutional. You can find an edge here, and the edges are so large. The returns can be can be phenomenal, and it's still early days. And obviously, I'll be frank, it's less early days than it was a year ago, and it was less early days than it was 2 and 3 years ago. So 2-3 years ago, there was huge edges, and every single year the edges shrink a bit as more and more participants get involved, but the edges are still large and the ranges are still very, very deep. Very, very wide, and that means and the markets are getting deeper, and that means if you're a good trader, yeah, jump into the pool. So that's not this is not what this meetup's about. This meetup's really about fostering a community that is passionate about not just trading, because I think trading is really just a subset of this crypto / DeFi / Web 3.0, whatever nomenclature you want to use. Trading is just a subset of this space, and that's why I really got drawn to this space, is because when you get first into crypto, we all start off with the same origin story. For most of us, if you've been around for a while, most of us who started 4 years ago or further back, there was only Bitcoin, maybe there was ETH, but that was pretty much it, right? Maybe some of the shit coins, but they were pretty much just trading vehicles. Like no one was silly enough to really, well, I guess there were some folks who were silly enough, but most of those projects failed. And so really the idea at that time, 2017 especially, was you're going to buy coins and to try to profit off them and try to sell them into cash, or you're trying to basically accumulate as much Bitcoin as possible, because that was the OG coin, and that was really the reason you were in crypto, is for Bitcoin. Well, fast forward 4 years, and now we have a deepening and maturing space that is a lot more than just quote-unquote cryptocurrency, right? We have now infrastructure, there's gaming, there's NFTs, there's DeFi, of course, there's obviously there's trading, that the actual exchanges themselves can be traded in terms of their tokens. There's just a huge diverse ecosystem that's being built out, and I think the idea that resonates with me is that I think in the next 3 to 5 years, it's not going to be that crypto's not going to be a different thing anymore. It's just that every single company is going to have some sort of crypto strategy, right? Maybe they don't call it a crypto strategy, but every single company, from the Apples of the world and down, is going to have some sort of interaction with the DeFi, crypto / Web3 space, whether it's through some sort of social token or through sort of reward token. Something is going to be on that blockchain that allows people to transact freely and move their assets across, move their assets away from a centralized party, right? So instead of me just simply collecting Starbucks points, right, where I can only use at Starbucks, in the future, you could imagine that Starbucks would actually have a token that could be freely transacted on a third-party exchange, and I could actually trade that for real value and not just for cappuccinos and lattes. Yeah, right? And I don't have to go through Starbucks ecosystem to be to trade that asset. So you can, I firmly believe that, that the tokenization, we're tokenizing everything, for better or for worse. I do have some opinions about whether that's a good thing or not, because I don't know if that's a great thing, but I think that's the trend, and I think that we're going to see many years of this playing out, from the tokenization of businesses. We know that already. We already have stocks, but you may see the tokenization of sub-businesses. So for instance, who's to say that you can't have a token for a Big Mac, right? Who's to say you can't have a token for your favorite artist, right? Like, why can't you buy a token for, a Drake token, or, insert your favorite artist token? Why can't you have, tokens for video games, and, and so forth? I really hope that we don't get to a place where we actually have tokens on individuals, which is beginning to happen already, because ultimately then you get to a place where you can begin to go long or short people, right? And that sounds kind of funny, and sounds kind of fun, but I think that's maybe a social dynamic we haven't fully thought out yet, and what that could mean. All right, anyway, so back to my intro. I went on a little tangent there. That's unfortunately, or fortunately, that's what I do. I do go off on tangents, so feel free to rein me in if I go too far. So prior to this this meetup. I was the founder of the Montreal Traders Meetup, so I see a lot of names from this group, from the prior group. So that's what I was running before. We ran a very good meetup for a number of years. Like I said, I think this meetup has a lot more design space, a lot more open space to talk about a lot more different topics. And finally, if you want to connect with me, you can find me there at my website or at my Twitter handle there at The Real Trading Edge. Okay, so as I alluded to already, here's the purpose of the DeFi group. So what I really hope that we're doing here is that, I'm hoping we're creating a community of crypto and DeFi enthusiasts that are willing to have a number of shared values, shared desires in terms of the outcomes, and that willingness especially to exchange ideas. And that's how we can all, grow and learn the space, because there's so much going on that it's impossible for one person, a handful of people to keep on top of it. As I said already, the space is diverse. There's gaming, there's NFTs, there's fashion, there's obviously currencies, there's smart contracts, et cetera. The more eyes, the more folks we can get involved in this, it keeps us all that more engaged and helps us understand what's coming out. So ultimately, I hope we're building this kind of community that's willing to share and exchange these great ideas. At the same time, I hope we see that crypto is also a way out or a way forward out of the current system that we're in now. I don't know if anyone has noticed or not, but our system right now is a little bit fucked up, to say it politely, right? So, today being a very, pivotal moment where we saw Russia go to war with Ukraine, and for what reason? I think most people are kind of scratching their head. We can't really understand how we got here in the first place. At the end of the day, it's not only that we're here now, but what is the system that allowed this to happen? And look at the actors that are involved, right? And these actors that are involved really don't care about you and I, and I don't think they really care about the outcomes of society at large. And this is why I think this idea of moving away from the centralization of what we have in our current society is a net benefit for humanity. And so hopefully if you share that same kind of vision, this is the kind of principles that I think we could build upon for this community. And then thirdly, socialize. So this is the fun part of having meetups. This is why I do it. I ran a trading meetup for many years, and that was my most cherished thing of that meetup, was just getting a chance to hang out with other traders. And I can't wait for us to once again get a chance to hang out together in person. And certainly when that time, when that space opens up, we'll definitely find the time to make it happen. All right. So that's the purpose of the DeFi Montreal. Let's go right to the DAO stuff now and talk about DAO, and then we'll get to the crypto overview and the DeFi landscape. So DAO, it's been very, very hot this past year and late last year, and DAO stands for Decentralized Autonomous Organization, as I mentioned earlier. And what I'm hoping we can do with this particular meetup group is to DAOify it. I don't even know if that's a word or not, but I'm hoping this is what we can do with it. So there isn't a single person that's just running the show all the time. Yes, you do have to have leaders in communities, but at the same time, you don't want those leaders being, the single point of failure, or you don't want them being the limiting factor of that community. Like, I'm sure there's a lot of people here who are passionate about the space, and are willing to contribute. And I want to set up an environment, a space where people, based on merit, can stand up and say, you know what, I wouldn't mind presenting something, or I have some ideas, and let the community get behind that, right? Versus having a gatekeeper always, saying this is what we should do or this is what we shouldn't do. Everything, this being a community, and it's what I'm really trying to achieve here with this group, this being a community, the community decides what it wants and how they're going to do it, and they're going to share in the benefits all together, right? And it's all going to be transparent. So that's the vision of it, and this is what it looks like. So I've been doing a lot of research around how DAOs can maybe, structure this kind of cooperation, and that's really what DAOs are about. And I don't think there's a better, format than a DAO for what we're trying to do here for this community, because unlike trying to run a business, or maybe some sort of investment club, a DAO is meant, you can get a lot of conflict when you have these types of organizations, right? Imagine if you're Apple, right, and you're competing against some cutthroat businesses like Google, like Facebook, and you're running in a DAO format. That means every single decision you have to make, you have to go to the board or go to some sort of governance process and vote. That'd take forever to get anything done, right? So for projects and for companies where you have to make a lot of decisions quickly, the DAO structure is not a great one, right? Because it's not competitive against a small centralized group that can quickly make a decision. Like for instance, when Facebook wanted to turn to Meta, Mark Zuckerberg, being the guy in charge, I'm sure it didn't take much for that decision to get made, right? Likewise, when Jack from Twitter wanted to make Twitter more Bitcoin friendly, I'm sure it wasn't that hard for that to happen, right? Because you have that CEO who's the leader, and he's the one who has the majority of the votes. But that's not what we're talking about here. This is a pure community, and as a community, right, we don't need to have. Yes, we can have a few people that are maybe in the leadership team who can kind of structure the conversation. But I think as a community, we can decide together, like, all right, what is it that we want to do? How do we want to collaborate? What topics are of interest? How do we want to raise money? With that money, what do we want to do with it, right? So should some of that money go back and flow back to the people that are involved, either in terms of the leadership team or the folks who are contributing, right? And what are the things that we want to do for the future? So that's kind of what DAOs are really, really great at. And I think because this is a community thing, they're really it's all win-win, right? There's really no drawback because or I think it's very few negatives because we're not necessarily trying to compete against another company or another kind of or some sort of maybe some sort of product cycle. So let's talk about the scope, and then we'll go through the list here. So this is what my ideas are, and again, this is just my first time socializing, so I want to talk about this a lot more because I think there's a lot of stuff that has to be fleshed out. But I'm hoping that we get out of this conversation today is maybe if this inspires some of you on the call, or if this is of interest to you, that you reach out to me, and that we begin to create a team of folks who want to contribute, who want to be members, or maybe who want to be part of this leadership team to get this thing off the ground. Because I can't do it all by myself. To be frank, I've done it in the past all by myself, but that wasn't that much fun to me. In the short term, it was fun, while I set it up, but then keeping it going for a long period isn't fun, or because it's not easy. So certainly, we can use all the help we can from the community. So the scope of it. We want to engage people, so everyone participates. We collaborate, share ideas. We cooperate. It's distributed, right? So not one person is doing all the work all the time. It's decentralized at the same time, right? So anyone can step in, step up, and it's autonomous. Same thing, right? No single gatekeeper. And how would you stake it? So imagine, previously when we used to do meetups for my other meetup group, when you had events, in-person events, we would charge a fee, right? So you could buy in, you'd have to pay, and some money would actually go to meetup.com, right? So a slice of that money would go to meetup.com, a slice of that money would go to PayPal, and then, we would capture the rest, and we use that rest of the money to pay for the venue, or pay for drinks, or pay for other kinds of things like our guests. But in this case, we'd stake. You could either stake by buying into the meetup. You could be awarded grant. We could actually grant tokens, and you could even earn a stake in the DAO by working for it, right? So like if you contribute, maybe you're doing presentations, maybe you're helping organize events, you could actually earn a stake in the DAO by actually participating, maybe even sharing, right? So this is the kind of economy we live in now, where we have a sharing economy, where if you can get more eyeballs on our DAO, on our community, then you could earn that way as well. Ultimately, how do you earn? Well, you earn in terms of rewards. That's the value portion, right? So the rewards could be numerous. It could be things such as obviously, being able to attend live in-person events free of charge, maybe, membership discounts. It could be the form of a token. So all DAOs have their own token, and that token can be used as a form of payments. So, it can be sold back and forth on an exchange. And DAOs can also have NFTs. So NFTs, we could use NFTs as a method, basically as a membership card. Think of it as, if you buy into the DAO. So I'm just spitballing here. It's not the way things are going to necessarily play out. But this is a model that's very popular nowadays with DAOs and newly sprung DAOs. So a DAO will spring up, and the way they get people involved is they'll have a NFT sale. Maybe you know, a 100 unique NFTs will be sold at a cost of whatever, $25, $100, you know, whatever the number is, right? You buy the NFT, all of that money then goes into the treasury of the DAO, right? So now, you imagine you sell it for, let's say, $25. You have 100 NFTs that get sold. Now the treasury, the DAO has a treasury of $2,500, right? And the person who buys the NFT now has a smart contract that says, I have basically an NFT that declares or shows my membership. And that NFT can then show different levels of membership. That could be a contributor membership. It could be, simply a small participant. Again, we can label any way you want. It could be gold, silver, bronze, whatever it may be. Again, this is up to us to figure out how we want to do that kind of NFT drop. But then the most important part is that you get that treasury, right? So now you have that money, right? And imagine back in the day, we used to collect monies from these events, right? They would go, but the treasury wasn't visible, right? And the group couldn't decide on how they wanted to use that treasury. Well, guess what? The early NFT folks who join, maybe they get a chance to vote on how to use that treasury, right? So the folks who own NFTs get governance, right? So now you're on that board, you get transparency in terms of the treasury, and you can see, you can see the analytics, you can see what money's there, and you get to get involved in the decision-making process. Every time you run a real in-person event, you collect more fees, collect more revenue, and it goes back to the treasury. Once again, the participants, the DAO, gets to decide how you want to use that. And this doesn't have to be serious stuff. We could simply decide, you know what? We have a bunch of money in the treasury now. Next meetup, let's just get drunk. Let's just have a $1,000 bar tab, right? It could be something fun, right? Or we can do something serious and get more serious and say, if we have a big enough treasury, you can begin to say, well, let's spin off an investment DAO. Again, I'm just spitballing ideas here. You can see how these are all composable, and you can begin to put building blocks in place so this can get bigger and bigger. We could have, an investment DAO, and folks who want to get involved, they can say, yeah, well, the DAO is going to put in this much amount of money into an investment DAO. We have a lot of smart folks in the community who are making some really good calls on projects. Let's dedicate some of the DAO's money to some of these investments or potential investments, right? And people can just decide to invest alongside or not, right? So the benefits, finally, profit sharing, right? So now the money that you're putting into the DAO, you can see where it's going, and potentially you can decide where that money is going to go, right? Maybe it flows back to the members in some sort of way, whether that's through free entries into events, or maybe that's through other partnerships we're able to create with other communities, or maybe it's just a simple dividend that gets paid back, through beer or wine or food or whatever it may be. Again, the DAO will have its own token. So, over time, if we're having a growing treasury, that token will have the value. Voting, right? So you can have voting privileges. You'll have rights. So as a member, you have different levels of membership, and finally status. So if you buy the first NFT and then this thing becomes big, you're going to be an OG. And maybe as an OG, it confers certain benefits as well, and that's status versus the person who joins, 3, 4, 5 years from now. And the whole point of this is that being decentralized and autonomous, this can go on forever, right? As long as the members are passionate and involved in the space, this thing will have life of its own, and it's not up to one person who's going to control whether or not this thing lives or dies. So I'll pause there because I've been talking for a little while about that topic because I have a lot of ideas about it, and I don't want to kind of overwhelm or underwhelm. But curious to hear any feedback from the folks on the call. Is that something you guys are interested in doing? Crickets. Does anyone want to? Sounds amazing. Awesome. Thanks, Darren. Yeah. Anyone else? So I love, yeah. I go where you go. Yeah. So the folks who are interested. Awesome. Yeah. So this would be the the OG group, right? So obviously, this is like my first time socializing it to this extent. Last month we did it. We just talked about it at a high level, but as you can tell, I'm still kind of fleshing out the idea. But I can see, in my mind, and hopefully you guys are kind of seeing the same thing, is I can see the benefit of it, right? Like the DAOs are just a natural structure for communities, right? Especially if you want to make it. Okay, in the past, if you think about it, if your community became big enough, the only structure you could do would be a nonprofit, right? And that's kind of boring. You know what I'm saying? Like personally, it's a little bit boring as a nonprofit, because obviously you have to register for taxes and that kind of stuff, and obviously, you would declare yourself as a nonprofit for taxation purposes because you're collecting money, right? So you obviously have to declare that money. So in terms of the DAO, this would be a new legal entity, right? That's kind of, right now anyways, it's outside of the law of taxation, because the DAO is technically earning this. And of course, there's a whole lot discussed there about what that means, because I think it's very, very gray right now. And I have some ideas around taxation, but that's a long discussion. But the point of what I was bringing up is this new structure, I think, is a lot more interesting than simply running it as a nonprofit, right? Just calling it DeFiMontreal.org and it being a nonprofit, doesn't have that same level of engagement. Whereas if you think of a DAO, you can see the potential there, right? A DAO doesn't have to be just a nonprofit. We could open up an investment arm of things. We could do an educational arm. We could do, a content arm. It could really be, anything the community decides. But again, it's up to folks in this community to see how we want to focus things. But I'm sure people, folks on this call, there's no shortage of ideas, and I'm just spitballing a bunch of them now. But the first things first is just to get this community together, and make sure that it's not just one person trying to push a snowball up a mountain. So thanks, guys. Yeah, that's a lot of good feedback there in the chat. So yeah, it's I think I've done a lot of research, and I don't see it being done anywhere else yet. So we would actually be one of the first ones to do it in terms of a meetup format. I see a lot of DAOs around specific projects, right? And I've seen DAOs spring up around certain initiatives, maybe like climate change and things like that. But I don't see a lot of like DAOs, what we're trying to do here. And I think the most important thing is, if you're interested, I'll reach out, that we begin to talk further and figure out, what's the mission and the purpose of something like this, right? And do we restrict it to just Montreal? Or do we have a bigger vision, right, that is beyond local, beyond regional, and more global? Because certainly, there's a lot of people in Montreal, but there aren't that many people in Montreal, right? So if we're doing something that's universal, then maybe we don't want to make our design space too small. But again, nothing beats getting in person. So that's one thing you cannot do if you make it a global group. Is you don't get that kind of can't do the meetups in person. But again, maybe there are ways to do meetups all across the world. But again, that's a bigger discussion. So I'll leave it there. I'll put a little pin in it for now, and I'll just share it. I'll leave it there. You guys can kind of think it through. But I'll follow up with the folks on this call, because I have I can choose here, and then we'll maybe we can I'll set up a time. I'll just set up a meeting, and folks who want to talk about just DAO stuff, I'll send an invite, talk just about the DAO, and the folks who are really interested can join that call, and we'll talk just about the DAO. All right. Okay. So thanks for putting up with me about that. That's been something that's really been on my mind for a while, and I've been thinking it through. So thanks for letting me flesh out that idea. And yeah, look forward to working with whoever's interested. And I'll try to plan something in the next week or so that we get some momentum going and get this kind of ball rolling down the hill versus me trying to push it up the hill by myself. So I know we're a lot stronger and a lot more capable and competent if we can get more people doing it together versus just one person trying to push this vision. So thanks for that. All right, so let's move on. So let's go to the crypto DeFi stuff now. So crypto market cap, man, what a year to date it's been so far. So I took this snapshot at the beginning of the day. I was like, okay, I'm preparing my slides for tonight's call, and I'm like, okay, I'll snapshot it, And then by the end of the day, I was like, I better snapshot a new one because the prices have changed so much 8 hours ago. I just had to do another snapshot. So what was it, like at 8 o'clock in the morning, BTC was down to 35,758, right? And then by this afternoon, it was at 38,396. That was a good 5% move there. ETH was down 33% year to date in the morning, and then it was only down 28%. So yeah, things moved a lot today, obviously because of the war and conflict in the Ukraine. But regardless, it's been a rough year to date so far for cryptos. I was kind of worried that we were entering a bear market at the beginning of mid-Jan. I was kind of saying that already. We're kind of probably in a bear market at this point, and certainly that's played out. But there's a few takeaways from this slide. Obviously, everything's pretty much red, except for the small patches of green. And so you have to kind of squint to see, well, there's some things that are clearly green. So what's green? This big stuff here, this green stuff here, those are all stable coins, right? So clearly, stable coins are not losing any value. People have been selling out of their crypto holdings, out of their non-long-term holdings, and basically hiding in stable coins, which is a very interesting phenomenon by itself because if you recall, back in 2017, 2018, that time period, there were none of these stable coins except for USDT, right? But that was very, very shaky at the time, and a lot of people didn't trust USDT. And a lot of folks still don't, but USDT now is a very, very large stable coin, which is, USDT is Tether. But now we have a lot of different stable coins out there that range the gamut of being centralized, like USDT and USDC, to being decentralized, like UST, MIM, and Frax, and DAI. DAI is run by MakerDAO. The problem with DAI, in my opinion, is of course DAI has I think the majority of their, I want to say at least a third of their treasury is USDC. So it's kind of a fake stablecoin when you can say a large chunk of your actual treasury is actually another stablecoin. So, and the reason they did that, if you don't know the history, is because their stablecoin was a bit too unstable. That's the way of putting it. They couldn't keep the peg well enough. It was too volatile for stablecoin. So the way they were able to make it less volatile was by taking another stablecoin that actually had a one-to-one backing with, I guess, USDC is a centralized entity that's not algorithmic. So they basically just put a bunch of that onto their balance sheet to flatten out some of that volatility. Anyways, stablecoins, a very, very deep and growing space in the crypto ecosystem, and it's finding more and more use cases all the time. So for instance, I think it was the last month, or was the last 2 months ago, Venezuela started accepting Tether as legal currency, right, as legal tender, right? So not Bitcoin, but they accepted Tether, right? And why is that? Because Tether is basically pegged to the US dollar. It's supposed to be pegged anyway. And so it shows you the use case there. When you live in a highly volatile place like that, Bitcoin's still too volatile for folks in Venezuela. But Tether, even though it has some risks to it, it has that that US dollar peg, and it's also running on crypto rails, which makes it very, very efficient. So folks in that space are happy to use Tether because it's better than what they have now. So yeah, keep watching the stablecoin space, and there are some interesting projects that are there, but I'm not going to spend too much time on that because that's a whole other presentation. And maybe we do one at some point. We did talk about UST last month. One small thing about UST to throw in there is that we talked about Anchor Protocol last month, and I'll just talk about it really quickly here. As I mentioned in last month's presentation, the issue with Anchor Protocol was that going into last month, we could see the Treasury, right? We could see the Treasury, and there's only $25 million left in the reserve to pay out the yields. So that only gave them, I think it was something like 30 days of runway, which was an issue, right? So it was like, well, yeah, people are going to go in there and just draw down that Treasury, and then what's going to happen when they run out of money to pay out the yield? Well, they have basically re-upped that pool, and now it's back to 450 million. That's now in that pool to fund out the yield payments. So if you're in UST, that means you're in good shape for the short to midterm. So if you haven't used UST or the Anchor Protocol now's a good time to do it because they have $450 million to pay out yield, right, at 19.5 APY, which is pretty good. The only issue moving forward is there's nothing stopping them from running down on that pool again. And so there's a number of proposals in place right now that are on their governance board about how to remedy the situation so the protocol itself can earn more revenue, or that somehow you can cap people from exploiting the yield. So for instance, you have some really, really big, you can imagine, right? 20% yield is phenomenal in the traditional finance space, right? Like I think most hedge fund managers would give an arm and a leg to get 20% a year, right? With low risk. So what's happening is that you have a large number of whales who are basically depositing big, allocations into Anchor to try to eat up that yield. So so now what they're trying to do with some of these proposals is try to find a way so the whales are not just basically, taking all that yield away from folks who maybe have smaller accounts. So that'll be an interesting play. Okay, keep going forward. How did they beef it up? They had a grant. They had a grant from Terra. Yeah. So from the Terra ecosystem itself, they gave a grant to Anchor. Yeah. A grant. Yeah. Terra is minting money. They're making so much money that 400 million to them is I won't say peanuts, but they can afford it, and it's like a huge marketing campaign, right? Like it gets so many eyeballs onto the Terra ecosystem when you have a stable yield product that generates 20% APY, right? So that's how Terra is known, and it's bringing a lot more developers, a lot more apps or dApps onto the ecosystem by having this successful project known as Anchor. Even though Anchor itself, you could argue, is not that successful because they're not making enough money to pay the interest. All right. So then they have to repay the grant. No, it's a grant. It's not a loan. It's a grant. So that's basically, it's an outright giving of the funds. Kind of like, if you were in university and a charity gives you a grant, or you don't have to pay it back. But they're definitely trying to fix that because it's not sustainable, right? So, but certainly jump in there now. Yeah, move the Ponzi money around. Exactly, that's exactly what it is. It's all a Ponzi. That's the thing about crypto. Not just crypto, but you realize everything's a Ponzi at a certain point. Just yeah, exactly. It's to what degree? Okay, so take advantage of it. Yeah, it's a Ponzi. It's all a confidence game at the end of the day. It's just basically everything's a confidence game. It's not good or bad. It's just the way things are. So. Let's continue. So that's the scale. I don't want to go too much further because we have a lot of slides still, so I'm already 50 minutes in, so let's just keep going here. So let's talk about DeFi now. So that was the crypto landscape overall. Actually, one thing before I go too forward. There's nothing else green here, as I said before, other than stablecoins and exchanges, right? Just like we know, like in the traditional equities markets, when markets crash, the only companies that are really doing well are the financial exchanges, right? CME, CBOT, right? they're crushing it. But yeah, Doge. Where's Doge? Here you go. That's only down 27%. That's not bad. It's like ETH. Look, Doge is even safe. Holding Doge is safer than holding ETH. that's ultrasound money right there. And SHIB is only down 28%, so it's even doing better than ETH. So yeah, ultrasound money. Just hold on to SHIB and Doge and for your retirement. But there really is no safe hiding places in crypto other than hiding in stablecoins or hiding in some of these exchanges, right? So this FTT is FTX's token. Leo is the Bitphoenix token, which obviously went up a lot. It was up 50% because they recovered. Well, they're trying to recover that money from the big hack that they busted those two hackers, and that's a whole other story, which sounds crazy. And then Osmo is also an exchange, or it's a DeFi protocol. Okay, so let's talk about TVL now. So TVL has gone down a bit from our last call. We're now down to 194 billion total value locked across all chains, across all projects. So I saw an interesting tweet today, or was it yesterday, that says at $194 billion in TVL, that's still not very much. That's actually very little, if you think about the space and how many projects are involved. But that puts you, if you were actually to put DeFi as a let's say it was one entity, it would be in the top 15 of financial institutions. So, the JP Morgans, the Goldman Sachs, the Bank of America's, BMO, World Bank, it would be in the top 15 in terms of TVL. So all DeFi now, still smaller than some of the major banks out there. But it's growing. Look, a year ago it was at 40 billion, right? So we're up close to, 5-6-fold, near the highs there. So, it's clearly, it's on a upward trajectory, and exponentially so. So I imagine that, there's nothing stopping this space from continuing to grow. In fact, you just see it now, even in a bear market, which I think we're in now, as I mentioned already many times. The building continues. If you go on Twitter, there's so many guys building right now. It's ridiculous. There's so many projects that are going on. Folks are not stopping. And ultimately, if people can try to find some sort of stable yields, compared to a bank that's giving you, 1% at most a year, if you can get, 5, 7, 8% conservatively, 20% on the high end side, that's pretty good. And it gets very attractive if you get some killer app out there that can basically abstract all the complexities of the different chains and the protocols and just show that yield by risk level in a simple app. That's gonna, that's gonna be the kind of fintech app, the killer app that's gonna make DeFi universal. So we talked about last month, that DeFi mullet approach. We have basically fintech in the front, but DeFi in the back, right? So that means the fintech stuff looks beautiful, using it on your app, like any really fancy mobile app, but in the back end, you don't realize you're actually using all the funds in the back end, and that's the DeFi stuff. So party, business in the front, fintech, party in the back, DeFi mullet. Okay, so here are some of the top chains now, all right? So TVL-wise, here's the big chains. You can see some of the trends. So this is from DeFi Llama. Ethereum is still the big dog right now, so that's where the majority of the TVL is locked up, is Ethereum. Gas prices have been going down on Ethereum, but still probably not the place where most people can transact unless you're moving around big nominal value of dollars, because the gas fees are still very high. As I said, Terra has been on a tear because of the Anchor protocol. So you can see, the TVL has gone up 15% just in the past 7 days. That's because everyone's going there for that anchor, right? Like, as markets are crashing, people are trying to go to stablecoins and they're trying to earn yield. BNB or BSC, so they had a bit of a change of name there. Binance Smart Chain has been losing ground, still pretty big. Avalanche doing great, right? Look at that 1 month change, up 24%. Has anyone used Avalanche on the call? The Avalanche chain, AVAX. Fantastic chain, by the way. I love transacting on Avalanche, even though the gas prices have been going up a little bit. So it costs you, late last year. You haven't used it yet? Okay. Yeah, fantastic. I think, out of all the chains I've used so far, you have used it. It's probably what is it to do on Avalanche? All the DeFi stuff. So yeah. You own some AVAX C-Chain coin. Yeah, C-Chain token, exactly. So Avalanche, maybe we should do an Avalanche spotlight one of these days. Avalanche is you can see here, it's on the top 4 of chains. And that means you can do everything on there. They have a bunch of AMMs, so automated market makers, so places where you can swap coins. They have a number of NFT, a lot of NFT launches are happening there. A number of games are launching off of AVAX, and just generally a good place to try to do DeFi. I mean, to earn yield, and the usability is fantastic. I don't think there's a better chain to transact with. In terms of user experience, I haven't found one. Literally, when you go to MetaMask, you press confirm, it's done like this. You don't have to wait. When you go on Ethereum or Binance Smart Chain, you click confirm, and it spins and spins and spins. You're like, I don't know if it's working or not. You refresh your browser. Is it still running? You can't tell. You go to the scan. You go to BSC scan or Ether scan. You check the contract to see if it's still running. Still transacting or not. AVAX is literally instantaneous. Yes, yeah. AVAX is an EVM. So EVM compatible chain. And so yeah, it is literally instantaneous because of the way that they do confirmations. So next instantaneous, probably the one of my favorite chains to use by far. AVAX, and then the next one's Phantom. Phantom also one of my favorite chains to use. Right now, Phantom is been exploding in terms of popularity, but the last month it's actually been pulling back in terms of TVL, as you can clearly see here. I think the reason being is FTM and Polygon's another good one. Yeah, exactly. Polygon's a great one. Phantom had a bit of drama last month, or this past month, with the whole Daniel Sesta thing and the whole abracadabra. Even though they're not on Phantom, he's partnered up with Andre, right, who is a developer on Phantom. They were supposed to launch a big project. Everyone got really hyped up about that, but then of course the whole Daniel Sesta thing blew up, and I think that kind of took a lot of wind out of the sales of Phantom, of the Phantom ecosystem. But still, there's a lot of Phantom developers who are very excited about that chain, and that's the reason why it was in the top 5. 3 months ago, it wasn't even top 5. Well, that's not saying. Maybe it's probably down here, but now it's top 5. So Phantom's still another one that's worth looking at. Solana, everyone knows Solana. Hopefully you know Solana. Down a lot less going on Solana nowadays. Just because it's been going down. For better or for worse, the perception is that it goes down a lot. It probably doesn't go down that often, but the perception is it goes down a lot. So it's not great, but still has some good use cases, right? What's good about Solana is it's good for trading, it's good for gaming, and if you want to buy cheap NFTs, you go to Solana. Tron, I don't know why it's there, but it's there. I don't know who uses Tron, but someone uses Tron. It's the top 7. Polygon, yeah, Matic is doing a phenomenal job. But look at the TVL. It's flowing out, so not doing that great. 3.9 billion. There's a lot of interesting things that are going on Polygon though. Matic, Chronos really stepping up here. I don't know why that is. Chronos, the most popular thing of Chronos is that its own, Crypto.com is on Chronos, and Osmosis also it's a chain based off of Atom. So another interesting one. Atom being a really popular chain, or popular. Yeah, Atom's a popular chain or set of how would I describe it? Exactly. Chronos chain is from Crypto.com. Yeah, I said it backwards. Right. Chronos chain is from Crypto.com. That's where the folks who go, or from Crypto.com, that's where they go to do their DeFi. Is on Chronos. Osmosis. So yeah, as I was saying, Atom is basically a protocol that allows people to build their own blockchains, and Osmosis is a Atom spawned off of Atom. So that's how I'll leave it there. All right, so that's the top 10. So let's keep going forward here. TVL now. So top projects by TVL. Quick question. I didn't know about CDC. How does that work? CDC. What's CDC, John? Yeah, Crypto.com, exactly. Yeah, Crypto.com has been getting more and more play, even though, I don't know that many people that are using Crypto.com, and if anyone's using it, let me know. But, they have their own, they have their own exchange, they have their own DeFi stuff on DeFi now, so they're definitely growing that ecosystem. But how actually decentralized it is, I think is the question, right? So in my mind, if you go back to that list really quickly, like which are the ones, and this is the big debate in the crypto world, the DeFi world is out of all these chains, there's always trade-offs that need to be made between that trilemma, right? Scalability, security, and what's the last one? Scalability, security, and what's the last one? Scalability, security. I'm missing one.
Decentralization.
Decentralization. Thank you, Marius. Yeah. Decentralization. So there's always that trilemma, and some chains will, of course, sacrifice one of those aspects to improve one of the others. And something like, for instance, Binance Smart Chain, which is easy to pick on because it's a really easy use case, is basically just a copy of Ethereum, but they made it smaller. They gave it smaller. They made the blocks go through faster. That just means you have to have beefier hardware. So it's more centralized because you can now only have a certain number of nodes that have beefy enough hardware to actually, that are actually able to keep up with the number of transactions that are required. and all those nodes happen to also be controlled by Binance. So, or at least they're known by Binance, and Binance probably maybe either owns them outright or has partnerships with them. So how centralized are they? You'd say very. How performant? Pretty performant, not as fast as some of these other ones that are coming up now that are having technology. And then the security, it is an EVM compatible chain. So the security has all the flaws that EVMs have, plus any other ones that you might have if you're a fork. So those are the kind of the considerations you want to make when you're evaluating these different chains. Okay, so on to projects. So I just want to run through these really quickly because I'm taking a little too much time. Here's all the ones, and I'll leave this with you guys today because I'm not going to go through every single project. But certainly, what I often do, like I probably do this once a week or maybe once in a couple weeks, is I pull up this. If you go to Token Terminal, so just Google Token Terminal, you'll find this chart, and it's good to do this every week, every couple weeks, just so you can see the different projects that are out there, right? And it's always interesting to see, how they rank, and oftentimes what are the new ones that are coming in. So, for instance, Osmosis is coming in fast now. Oops, I went too fast there. Osmosis is coming up. Venus, I didn't even know about Venus up until like a couple weeks ago. Yeah, Crow was a token, exactly. Venus is, is popping up. Abracadabra has been going down because of all their scandals. And go through some of these and just if you're interested in the DeFi space, then take a bit of time to begin to familiarize yourself with all the different major projects. So Curve obviously being the most important DeFi project in the ecosystem, and it probably has the most amount of relevance, and that's the reason why there's this thing called the Curve Wars that are going on. Okay, so that's top projects by TVL. Now here's a fun one to look at, and that is top projects by TVL trend in the past 7 days. So I like to look at this every week and just see what new projects or protocols are popping up here that I've never heard of before, right? So a few names popped up this week, and I was like, man, I don't know this name at all. Euler. I had no idea what Euler was until this past week. I Googled it, checked it out. It's actually running on Binance Smart Chain. It's actually a pretty decent. It's like a Swiss Army knife. You can do everything on there. You can trade, you can stake, you can farm. So yeah, and it's really simple though. It's like it looks like TradingView, but you have all these other options that allow you to easily, to do the staking and do the yielding. So it's kind of like they built the TradingView and they inserted these simple options to do the rest of the stuff right beside the chart. So very compelling. And they just made $64 million in the last 7 days. So the project is clearly making some revenue. So yeah, really neat project. I'll just talk about the top three. Maple Finance, interesting project as well. It's been bubbling up under the space for a while now. Not bad. Made $628 million in revenue the past 7 days, and a large part of that is because they now they basically are a kind of a DeFi platform that caters to the institutional space. So they have a deep pedigree with institutions, and they onboard institutions into the DeFi space. And so this past week they announced that Celsius, so Celsius is a centralized, coin. You can stake your coins there, and they give you a yield. It's a centralized yielding service, one of the bigger ones, kind of like BlockFi. Maple Finance and Celsius are now partnered up, and you can actually they're actually going to do DeFi now through Maple Finance. So that's interesting. And finally, small one, Perp protocol. It is a free, interesting. It's like kind of like Robinhood, but for ETH and BTC so far. It's like a future. You can trade futures contracts on Bitcoin and Ethereum for free. So it's kind of like a Robinhood for traders. Right now, it's just for Bitcoin and Ethereum. So interesting development there. Again, it's already made $35 million in 7 days, so it's not bad. Okay, let's keep going. top dApps based on the cumulative revenue. So obviously the big dog is Ethereum. It makes all the money, but that's not really an app. I would say that's actually a chain. But the next one would be obviously OpenSea, Uniswap, OpenSea, and look, LooksRare right behind OpenSea. So LooksRare obviously is a decentralized OpenSea wannabe, right? That's trying to knock on OpenSea's door. Okay, keep going here. Here's another interesting take of things. Top projects by total revenue trend. So these are some of the newer ones, some of the newer names that are catching up, that are making that are trending upwards. So Cap, I don't even know what that is actually. Oh yes, Cap is a very, very small trading platform. So look, they didn't make much money. They made $71,000 bucks, but they are growing fast though. So basically from a small base. So they made 71K in 30 days. So basically, it's another trading platform. That's obviously it's a very small one right now, kind of niche. Next Mutual though, doing pretty well. So their revenue is really growing. They are growing quickly here. Next Mutual we talked about in the last month's meetup group, and that's basically insurance, right? That's an insurance platform for smart contracts. So I think there's a lot of upside in Next Mutual as people want to get involved in DeFi, but they also want to buy insurance in case the smart contract gets hacked or there's some sort of exploit. So that one's definitely one to watch. And Arweave is infrastructure. So Arweave is an infrastructure play, and they're beginning to grow as well. They actually have a token itself. They actually have a token AR. You can actually just easily trade that one. Okay, protocol revenue. So protocol revenue is how much money is not just the project making, but how much is that protocol going back to token holders. So this is a slightly different view versus just a total revenue play. This is the protocol revenue itself that's being sent back to the holders of that token. So look, Ethereum obviously it has a burn to it, so that's why it's so big. But then of course LooksRare, right? They're doing that. You got DYDX, which is another futures exchange platform. AVAX, OpenSea, and even MetaMask is generating protocol revenue. Okay. Questions. When you say revenue, does that mean they actually made money, or people have simply staked coins in their dApp? It means they actually made money. Yeah, that's actually revenue itself that the protocol has made. And then protocol revenue, which this is what this is showing, is a bit different. That's actually what it gets distributed back to token holders. So when you hold like governance tokens, you get paid that back in the form of yield. So that's what this is showing. So some of these guys, if you hold their tokens, you can potentially earn that yield on that. So by stake on coins would be the TVL. We're showing here actual revenue, which is crazy, right? So look, some of these tokens, some of these projects are making real revenue, right? So look at Euler made $64 million in revenue in 7 days. So they were zero last week. So that's impressive for a project because it's brand new. It's not brand new. It's a few months old, but that's not bad considering it's a software project. It's all upside from there, right? Because now once the pro stuff is developed, there isn't that much overhead cost, So yeah, maybe you guys have more in marketing, but yeah, it's all upside from there. Okay, let's go forward here now. And yeah, so here's the top projects by protocol revenue. And again, this is protocol revenue as defined by token terminal is what floats back to the holders of that token holder. Yeah, we can float back to the token holder. Next Mutual doing pretty well. I think this is definitely a project to watch. All insurance, assuming they don't blow up, right? So assuming they have the proper risk management, I think insurance plays will be very, very interesting going forward because we all know that DeFi is risky. So why wouldn't you pay, 1, 2, maybe 2.5 basis points, or 2.5 percentage points to insure your staked tokens, right? Especially like so we saw last month Anchor, they're paying you 20% a month. If I have to pay 2% in insurance, that's not bad still. I can sleep a lot better at night, where I know I'm insured and I'm only making 18% versus 20%, and I have a lot more comfort in that protocol. Okay, liquidity and Euler, again, Euler being another one that, again, we talked about already. All right, so that being said, let's wrap up there. So that's a kind of an overview of all the different protocols, the hot ones anyways. Talked about Euler, anything else? There's Perpetual again. Curve, talked about that already. Helium. Helium is actually very interesting as well. I think a few people on the call have talked about helium before. Who here knows what helium is? And then we'll talk about DOPEX afterwards. Helium. HNT is the actual symbol for the token. So helium is the protocol that is trying to create a mesh network, a 5G or a Wi-Fi mesh network that allows anyone, anywhere, to hop on and to get an internet connection. That's what you pump into balloons. Yeah, that is what it is as well. But DeFi-wise, it's basically a Wi-Fi mesh network, and the way you get involved Helium is you buy a miner, a physical device, you prop it up in your house somewhere. Anyone can do this, and there's some people who invested a lot of money to buying these miners. You run on Raspberry Pis, and if you want to get fancy, you can buy these big antennas. You strap it up to your house or onto your warehouse, and then anyone who drives by, like a truck or anything like that, can easily hop onto this mesh network. So you can imagine, let's say you're a trucker, if you're not going to jail, that is, if you're a trucker and you're driving across North America, and you have a Helium or Wi-Fi hotspot, you can jump from hotspot to hotspot, or maybe you just have like an IoT device on your truck. Then this IoT device can hop onto any mesh network it can find, and every time it hops onto a mesh network, it'll pay just a bit of, a few tokens to that mesh network based upon its usage. And that's how this mesh network works. So that's when you use it, get paid for it. It's paid for use, right? And that's how these Helium miners work. Is you can get paid for anyone using your Wi-Fi mesh. But it's doing phenomenal. That project is doing pretty well. And personally, I've been trying to buy Helium miners now. I put an order 10 months ago, March of 2021. Is that March? Yeah, it's March already. Man, it's nearly a year. Is it March? No, maybe April. No, it is end of March. I'm still waiting. I'm still waiting for my Helium miners. I bought 2 of them. I'm still waiting for it. So they're really backlogged, and it just shows you how popular this is. And I think it's something that people have been looking for, because any kind of centralization, we're at this point in the cycle now where we're trying to get away from centralization, right? Right now we're all stuck on the same providers, Bell, Videotron, Rogers, whoever you're with, and ultimately the idea is, wouldn't it be amazing if you could go anywhere and jump on this decentralized mesh network to get your internet, right? And not worry about having to have a contract with such and such, right? And that's what this is about, and having that end-to-end mesh network that doesn't have any kind of dependencies. Okay. Okay, so let's take a bit of a break now. So again, I've been talking for a little bit of time, so I'm going to take a little bit of a break, and I'm going to open it up to questions, just some banter, as I kind of recharge a bit and get ready for for a spotlight on DOPEX. As I have my little sip of water. Anyone have any questions or any comments so far? Because I feel like I'm doing a lot of talking. Tezos. Oh, thanks, Marius. Tezos. I haven't seen any news on Tezos, but Tezos is actually that's one I actually watch a lot, John. So why do you ask about Tezos? I actually watch Tezos very carefully, not because I'm enamored with the project, but funny enough, Tezos has it's kind of weird. coin, if you actually just if you're a trader, Tezos is actually a very interesting coin to watch because it tends to lead other coins. Small bit of alpha there, but for whatever reason, Tezos is a very, very good one to watch. But no, I don't have any news on Tezos. You have any ideas on Tezos, John? Are you a Tezos fan? What do they call Tezos people? I know, like, Ethereum people are called Ethereans. I used to watch it too. Consider staking. Yeah, out of the loop. Yeah. Yeah. Did you buy the dip today? I did not buy the dip today. Jason says, did you buy the dip? Who bought the dip today? BTFD. Anyone buy BTFD today? I was really considering it. You did. Good job, Adina. I was really considering, but I've been crushing it. So I've been crushing it. I'll be a little humble. I'm doing okay on the way down. So today I decided that, you know what, I'm just going to let loose. I've been very, very short for a long time. I'm just playing every single little wiggle pretty well. So I decided not to buy today's dip because I think there'll be other opportunities. All right. Okay. Thanks for the questions. A bit of a break for me to relax my voice a bit. All right. So let's get into DOPEX now. So DOPEX, as we said in the beginning, stands for the Decentralized Options Exchange Protocol. And DOPEX is interesting for a few reasons. Number one, I think there's a big narrative right now on crypto Twitter that DeFi 1.0, 2.0 had its run last year, right? So everyone, DeFi 1.0 had a run late 2020. 2021 was DeFi 2.0, and the DeFi space is kind of run out of steam now. But the reality is that a lot of folks are still chasing yield. But a lot of folks have gotten a lot smarter. They've realized that some of this yield is not sustainable. And in fact, some of this yield is a lot of smoke and mirrors, right? So when you have a protocol advertising, let's say, a 1,000,000% APY, and I'm not joking, there are literally, projects that are advertising a 1,000,000% APY. The reason why they can do that is because I'll just try to keep it short here. There's many reasons, but they can do that because basically they control the tokenomics, and they can dilute everyone else, right? So the higher the APY, that means the more they can dilute you as a token holder. And so folks now are getting smart to this, and folks have become very, very mercenary, right? So you just yield as much as you can, as quick as you can, and as soon as the APYs drop, you jump to the next pool. So that means folks have become very mercenary-like, which makes it very competitive. And so then people left over, they get dumped on, right? So it's just not sustainable. So in comes options now. So the options space is obviously very, very mature in the TradFi world. And as we all know from traditional finance, or maybe you don't know, is that selling options have some lessons learned with Olympus. Yes, me too, John. Yeah, not personally with Olympus. My lessons were with with Abracadabra and Daniele Sesta's projects. So where was I? Yeah. So as we know, with in the TradFi space, a lot of folks, they create passive income for themselves, or passive, or less active income by selling options, either selling calls or selling puts and capturing that premium, and hoping that the price expires below where you sell it, below or above where you sell your option. All right. So that's now been introduced into the DeFi space. But the issue is that we already have options on DeFi. Options in crypto. The biggest exchange being Deribit, which is an offshore exchange. I think they're in Asia somewhere. Not available to Quebecers, by the way. So if you go to Deribit, you try to open an account, it is not available to Quebecers, or I believe Canadians in general. So unfortunately, we're kind of out of the loop in terms of using that platform. Also, as we know from the TradFi space, is that you do kind of have to be a bit savvy when trading options, especially selling options. So it's easier to buy in the money or out of the money options and just making it a lottery ticket, right? So like, folks have done with the GameStops of the worlds and the EMCs and that kind of stuff, where they're trying to just buy out of the money options and create that kind of that gamma squeeze. But crypto, a lot of folks are still very new to options in crypto, and we do know that selling options is a trickier game. You do have to know your Greeks a lot more, and be familiar with that terminology a lot more than simply just buying options. So what is DOPEX? Well, DOPEX is basically an exchange that, number one, is decentralized, so meaning there isn't a market maker. So just like in DeFi, where there's not a market maker that's making the market, so there isn't a single market maker that's sitting there, making a market. In DOPEX, there is no market maker either. It's all done through smart contracts. It's all done through code, right? So it's an automated market maker essentially who is making this OPEX pool or this options pool, okay? And it's decentralized. So at a high level, maximum liquidity, that's what DOPEX is, and minimum exposure to options. So it's very, very easy for folks to basically get in here, stake their ETH or BTC, whatever token they want, or their stable coins, and then earn yield off that either through something like basically it's like having a canned, covered call strategy or a canned put selling strategy for you out of the box, right? So you don't have to worry about the Greeks, you don't have to worry about the strikes necessarily. You just put your money in there, and it just creates that passive income for you, quote unquote. Okay. So how to do it? Through two mechanisms. One is called, the one I want to talk about today is one called the SFOV, the Single Staking Options Vault, and the other one is called the Options Pool. Not yet live. So I tried it. I've been trying to get into it, but it's not yet on there. Now, the DOPEX platform, there's a lot going on here. It's actually a very the project is actually coming along very quickly. It's actually being sponsored by some pretty well-known VCs and influencers. So if you're on crypto Twitter, you may know a guy named Tether. He's a big Ethereum whale, and he's one of the big advocates of this platform. And usually what Tether touches does pretty well, as he's a big backer of this. But again, do bear in mind that he is in there, so you always have to watch out for when you have known whales out there, they may dump on you. So that's something as a heads up. But he is involved in it. He is trying to make it successful. But just again, longer term, you do have to watch out for those kind of mechanics, those dynamics. So max liquidity and minimum exposure to options protocol. Okay, so here it says it maximizes the gains for options buyers and minimizes the losses for options writers. How does that work? I'm going to talk about options in a few moments for folks who may not be too familiar with options. Now, who in the call those options? I see a lot of names that I think probably know options pretty well. Who here knows basic options? I'm not going to get into like deep strategies around butterflies and iron condors, but at a high level, who can say they know options 101? I don't have to talk too much about Nope. Okay. 25 years. Awesome, Adina. All right. Excellent. Very good. So I only have one no. So I'm gonna keep it very. I'll keep it at a quick pace, and then Pete, if you have more questions, feel free to reach out to me, or you can go through this deck and get the 101. So what's different with this protocol is that it actually, when you're selling calls, for instance, and let's say you get called out. So let's say you're long something, you sell a call on it. The best case scenario is that it ends below your strike price, right? When it expires below your strike price, and you get to collect the premium, and you get to keep your stock or your asset. What happens when it closes above it, though? Obviously, that's when you can be, you might get called out, and you can you lose that exposure, right? You're getting called out of your position, or potentially if you're selling puts and it breaks, and it expires below your strike, then obviously you're facing losses there. Well, in this case here, it actually minimizes the losses of option riders, because not only do you actually have premium not only capturing premia from the put contract, but also there's actually yield being created from the stable coins that you're actually staking into the protocol. So that'll make a lot more sense in a few slides. So what are options? So very quickly, since most folks here do know what options are, that's great. So basically, you only need to know 4 things on this platform. It's pretty straightforward. It is not complicated. Like you don't have to know all the Greeks. If you know the Greeks, it's helpful, but you do not need to know the Greeks to use this platform. Call options. So you need to know what that is. Call option is basically a right to own something, right? The right to own it at a certain price. So if ETH is trading at wherever it is today, and I buy a $3,000 call option, that means I have the right to buy ETH at $3,000. Put is basically the right to own something at a certain price. So ETH's trading at whatever 28 or what, I don't even know what it's trading at right now. What's it trading at? ETH is trading at 26, 28. So let's say I buy the 2,500 put, then if it closes there, and I buy it today, then obviously I get the difference between where it trades and where I bought it and where it's trading at that time. So I'd capture that difference. You need to know the underlying asset and strike price. So as I was saying already, so the asset being ETH in this case, as I was mentioning, and the strike price. So you need to understand, you can actually use options across the various strikes. Strikes are just basically like prices, like 2,500, 2,600, 2,700. These are called strike prices. Usually they're round numbers to make it simple for people. Then you have the idea of American style options or European style options. American options are the type of options where a person who buys that option can actually choose to exercise it at any time they want. So if you buy a call on a particular option or on a particular asset and it gets in the money, or not necessarily even the money, I can actually just choose to take that ownership of that stock or that asset at any time I want. In the European options, you actually have to wait, of course, for the option to expire, and then you can choose to exercise that option or not. Interestingly, not on the slide though, if you look in the docs, and this is coming out in the timeline, they've actually created a brand new type of expiry or option, and they're calling it the Atlantic option. So it's a very, very neat. This is a DeFi primitive. I've never seen this before, but they're calling it Atlantic style options, where you can actually not only redeem it, you can actually exercise it prior to the option expiry. You can even shift your strike prices mid-option. So before it expires, you can actually shift it and move your collateral along without necessarily having to exercise it. So very, very neat. It opens up a whole new ballpark of things that you can do now. But that's something that's in the works now, but they have documentation around it. But it's not fleshed out yet. But it's in there, and it's something that they're working on. So very, very interesting potential there. Okay, so let's go through some things you can do with it now. So as I mentioned already, the benefits of this platform is that it allows to use this platform to get involved in options without extensive knowledge of the Greeks through these single state option vaults, right? So these single staking option vaults. Now, these SSOVs, and that's what I'll call them for the rest of the presentation, these single staking option vaults allows the user to lock up their assets. Let's say you own some ETH. It allows you to lock up that asset for a specific period of time, right? So that's your expiry time, and then earn a yield on those locked assets. So let's say, for instance, you're a long-term ETH holder. You don't want to sell your ETH, but you wouldn't mind earning some yield on it. Well, with this protocol, you could lock up your ETH and then use an SSOV call strategy to sell calls on it every single month and earn yield. Now, the way these things work is through what they call epochs, or a time period. So they drop new options every single month, and so it's basically a monthly expiry. So each month, you get a chance to basically roll your options, right? So every month they open up the contract, you decide if you want to stake your ETH or your stablecoins or not. So you take your assets, it gets deposited into a smart contract, and then you can deposit it into a call style or a put style option, and you can choose if you want at specific strike prices. We'll talk about that in a few moments to become more obvious. And then all these SSOVs, they only utilize the European style of expiry. So they don't use American, they don't use Atlantic, as I kind of alluded to. It's just the SSOVs only use European. It makes it easier. So just for, just for newbies, you're like, oh, what does this all mean? But, if you know about options, you'll kind of get your mind wrapped around the fact that, hey, it makes it super easy, because all you got to worry about now is that time of expiry and the strike that you want to pick and how much money you want to put into it. So DOPEX itself has a two-token model for the protocol. DPX is the governance token, okay? And so when anyone uses the protocol, there's a fee, obviously. So the protocol generates revenue through fees, and those fees, so the fees are generated from vaults, pools, and wrappers built on the token, built on the protocol, and that gets a portion of any kind of transaction revenue, and any transaction gets sent back and accrued into DPX. And DPX does have a limited supply, 500,000 tokens. And then there's RDPX. And this thing is a rebate token. This is a very interesting thing. This is a brand new set of tokenomics I've never seen before. And it's actually very novel. And I think we're going to see more and more protocols that are going to have this type of structure. We actually have this secondary token that doesn't necessarily have any revenue type, any kind of revenue that floats back to it. But you do receive it as part of using the platform. So, for instance, if you lose any money on the platform, you actually get some of these RDPXs back. So let's say you're in a losing, covered call strategy, you'd actually get some of that money back to you. It's like 30%, I think was the number that I saw in the docs. Some of that money gets floated back to you in the form of RDPX tokens. So right now, the RDPX tokens have no supply cap. But what's interesting is that you're going to be able to use, in the future, if you look at the docs, you can use these RDPXs in the platform to either achieve higher yields or to unlock certain vaults. So it becomes kind of like a membership. Yeah, a consolation prize. Hey, thanks for playing. You kind of get this token, and this token allows you to unlock other things in the platform. So it definitely makes it interesting because you can see how it can incentivize people to continue to use the platform. Like, let's say, in the traditional world, if you get burnt selling options, you're probably not going to do it again. That's like, oh man, I sold a bunch of options and I got burnt. You're like, I'm not doing this again. Screw you, CME and interactive brokers. There's no loyalty there, right? But here, here's a consolation prize, right? Here's 10,000 RDPX. And we promise you that in the future, you're going to be able to use these RDPXs for something, right? And maybe that's to achieve, better yields in the future, or to unlock these special pools. So at least it incentivizes people who are using the protocol, and it shows that you've been using it, right? So, and even the losers can kind of make out as winners. So you can see how tokenomics are very important in crypto, and there's a lot of potential there, right? So I can see this, the more I learn about RDPX, it kind of gets my brain kind of going exactly. It gets my brain going because I can see all the potential what you can do with these tokens that are not linked to your primary token. So DPX is their primary token, and that's one that has the fixed supply. But there's RTBX doesn't have fixed supply this time. But again, read the documentation. This is not a session based on RDPX. Okay, one final thing before we get to the actual using of the DOPEX is this here. You need to know about tokenomics, and that is the distribution. So anytime you're going to buy a token, kind of good to understand if you're going to be a serious holder of it, who owns what and how much. So here's the breakdown. So it looks pretty conservative. I don't see anything here that's kind of a red flag. Like for instance, early investors, they got 26%. So you do need to know about that because, as I said before, you have to watch out. If you are going to be holding your DPX as a long-term hold, you do need to watch out that these early investors could dump on you, like we saw with Solana, right? So Solana and a number of these layer 1 protocols had a lot of early investors, and so now you just have constant dumping on these late entrants. So I think it's just pretty conservative. I don't see anything here that's kind of a red flag. So to me, the founders' allocations is all right. 12%, it's not crazy, right? It's not like a massive amount of unlock that's going to happen that they're going to dump on you, infinitely. So I think that's reasonable. So I think it's a pretty well scoped out model in terms of tokenomics for DPX. Seems pretty fair. Pretty fair. Okay, so let's get into using it now. So if you go onto the website, so DOPEX, just Google DOPEX. I think it's dopex.io. I think that's what it is. You go to DOPEX, and here's what you can do. This is what it looks like. And you'll see, today, I'm going to focus just on those SSOVs. Because you can do more, but I don't want to overcomplicate things for this session, so we'll just keep it to just SSOVs. So right now they have, let's see here, 1, 2, 3, so they have 12, 11, 13, so they got 13 different SSOV pools, okay? They have a mixture of call pools, so just calls, and a mixture of puts. So I think a few months ago they only had calls. During the bull market, they only had calls. So the best you could do is you could buy calls, you could sell calls, aka covered call strategy. But now they also have puts. You can buy puts, you can sell puts. So on calls, you can do calls on DPX. So when I say calls, you can buy or sell calls on DPX, RDPX, ETH, Geom, which is Olympus DAO, GMX. Guys, you got some Geom, nice. GMX, which is a perpetual futures exchange, another good project actually. GMX, I'm looking at that one. AVAX, we talked about already, and BNB, which is the Binance chain coin, and you can buy puts on BTC. I'm missing one, sorry. There should be an ETH put, yeah, there should be BTC and ETH. I missed the ETH here. Curve, Geom, and RDPX. Man, it would be nice to buy puts on Geom because that thing that's gone down like, yeah, there would have been really nice options there. So I did forget to mention though that all these coins here in this box, these are all on the Arbitrum layer 2. Okay, so that's the chain that they're running on. So you need to move funds over to Arbitrum in order to do this stuff. Okay, and then for AVAX coins, if you want to buy calls on AVAX, that happens on the AVAX chain. And if you want to buy calls on BNB, you got to have coins on BSC. So they are multi-chain at this time. I think they're going to get more multi-chain. But right now, all this stuff in the big box, all on Arbitrum, which is, again, layer 2 ETH. Pretty fast, pretty good fees, right? So, an ETH fee would, gas fees would be something like, what, $50 for a transaction. Arbitrum, $2, right? So that's kind of the benefit of being on layer 2. Personally, I'm not a fan of Arbitrum. I never use Arbitrum. I actually prefer Matic, Polygon, but again, that's neither here or there. Okay, so there's the different pools that are available. Let's talk about some of these pools now. So here's an example of a pool and what it looks like. Let's say I want to buy puts on ETH. Well, say I want to buy or sell puts on ETH. I'll click on that ETH SSOV, this one right there, right? That right there. I'll click on it, and this is what I'm going to see. So it's very straightforward. All you got to do is, if you want, you click on buy put options, you pick your strike prices, and I should have clicked on here and shown you the drop downs. I think it gives you like 4 to 5 different strikes, so not a lot of strikes, and not a lot of stuff is out of the money. So it's kind of like, like, let's say like, maybe 4 or 5 options there, and then you can choose from USDT in terms of collateral, USDC, or Curve. So Curve being, if you know about the Curve wars, every single protocol is trying to get Curve. So, you can also stake Curve. So those are the 3 different types of assets you can deposit. So basically that's it. You pick your strike, you pick your deposit collateral, and you get on the deposit. If you want to buy options, or you choose withdraw if you want to sell options. Okay? You can see here the next epoch. Yeah, what's the expiry? Yeah, good question. It's monthly. It's monthly, so it's basically a monthly expiry. So So these epics, they run in 30 days, or whatever the month is, 30-day increments. So that's what you can see here, epic 1. And the next epic, epic 2, opens tomorrow. So you can go see it yourself. You can see the next epic opens tomorrow, and that means you cannot, again, this is European style, right? So you lock your money in there, it's locked for 30 days. Nope, no American style options. It's not for this product. The SSOVs, yeah, the SSOVs are just European. They have other stuff that allows you to do mixed stuff like American and I was saying for Atlantic style, but that's not this pool. Okay, so here's a nice little I was going to call it a flow chart, but it's done in squiggly lines. But I found it on Twitter, and it's actually it does a good job explaining kind of Twitter speak what we're trying to do here. So let's say you got some stable coins that you want to make some yield off of, right? So in this case here, you got either USD, Tether, or even I just said Curve, right? So if you have some Curve coins, CRV tokens, I mean, then you can deposit those. And let's say you want to buy the dip on one of these other tokens. Yeah, so if you want to buy an option, you click on buy options and you pick your buy put and then deposit and pick your strike prices. We'll get more to this. I'll give you the math. I'll give you actual numbers in 2 slides. It'll become a lot more obvious. I'll give you the high level stuff here in pictures now, and then we'll get to the actual numbers in the next slide. So let's say you want to buy the dip. So now I'm going to be using the SSOV P pool. P means puts. So, one of your potential strategies here is to sell puts, right? So when you sell puts, that basically allows you to collect the premium on that put. And if it doesn't break below or expires below your strike price, then you get to keep that premium, right? So when you sell a put, you get that premium, you get to keep it. But if it does expire below the price that you chose, see the prices here, then you're going to have to pay the difference. Okay? So unlike the traditional finance space where you do things on margin, with crypto, there is no margin right now. There's no margin. This stuff is fully backed. I mean, it's very safe, but also right now, not that capitally efficient, right? So these things are fully backed. So if, when you're selling, right? So we all know how it works in, well, we don't all know, but if you ever sold options, then you know that it's a margin type of arrangement where you need to have the prerequisite margin to be able to sell these options, right? And obviously you can offset your margin by going long or being long the stock or being or buying some of the stock to offset some of that margin. But in this case here, this is fully collateralized. So if I want to sell a 2,900 strike price of ETH, I have to deposit $2,900 worth of stable coins into that pool. Because guess what? That money that I deposit in there, that actually makes the market. That's the interesting part of it, right? So there is no market maker out there. Literally, it's the money that you're putting in is creating the market. So the money that you put in is what creates the market and allows this thing to happen. So let's say you want to buy the dip on ETH. You deposit some money based upon where you think it's going to go. These are just examples: 2,900, 2,700, 25, 2,300. You pick the strike price that you'd be happy buying the tokens at. Let's say, what did I say ETH is trading at today? 26.05. Let's say I want to buy ETH at 2,500, right? So I deposit $2,500 with the stable coins into that pool. You deposit in here, and those stable coins, this thing actually goes off, takes that money. It doesn't just sit there being dead money. It takes that money and actually deposits it into Curve or convex curve or whatever they're doing to, I think it's just pure convex, pure curve. Yeah, to capture some yield. So it's actually taking that money that you deposited and earning interest in that money that you'll get paid out of later. You'll also collect the options premium. So anyone who does buy options, right? So you have option buyers, like, yeah, I'll buy that $2,500 strike price as a put. That money will go to you, right, as an option seller. And then expiry, if the final price is greater than your strike price, let's say it's 2,500. Let's say that's the one you bought, or sorry, you sold. It expires right now. Let's pretend it's, the end of the month. It's at 2,600 where it is trading at now. It's above your strike price. Then you don't get assigned, right? So you collect back, you get your money back, all your stablecoins back. You collect the rewards that came back from this pool here, right? Look, it's making 6.64%. That's what it's saying right now, right? In curve emissions, that's what you're making just from the farming it, and you're making whatever money you made from selling premium. Right? Whoever bought that put, you're getting money from that as well. So you collect your premium, you get your farm rewards, then you get back your stables. Does that make sense? And then the other option is, if the strike price is below yours, let's say it keeps tanking, right? So you sold the 2,500 put, but unfortunately it goes down to 2,000 by the time the contract expires. So now there's a $500 delta, right, between where it expired at the end of the month, that 2,000, and you sold at 2,500. Now you have to make up that difference. So you do get to keep your farmed rewards. You do get to keep the premium like you do with traditional call writing or option writing. Then instead you basically slash your stables, right? So the money's already been collateralized. So basically they just subtract the difference between what you sold it at, 2,500, from the 2,000. So that $500 is the delta there that you're getting slashed. What do the premiums look like now? What was I looking at what was it the other? I was looking at this afternoon. I think for one contract, I think I was looking at ETH. What was it again? Well, we'll do it afterwards. I'll pull it up and I'll take a look. So I think the reason I wasn't able to look at it. I remember now. I couldn't see the current month contract because obviously the Epic hasn't opened yet, right? So I was looking at the prior month's contract, and I think that's what some of these numbers were coming out as. So here, here's an example. All right. So let's go through some examples now, and then we'll get into we'll see if we can actually do a little demo of it if we have time. Although we're running out of time here. But maybe I'll talk through what you do to find out. Okay, so 3 ways to use this, right? So let's say you're an outright speculator and you think that ETH is going to go down. So let's assume that ETH is at $3,000 USD, right? And you expect it to go down to $2,200. So this is coming straight out of the documentation. This is how it works. Okay, so we go into that single, staking option vault for puts, and you'd buy that option. You could buy, let's say, the 2,500 USD strike, okay? And you pay $60 worth of premium. That's what it says in the docs. I don't know what it is right now, but that's what it says in the docs. So I'm sure it's not that far off. I think obviously these things change based on volatility, because they are using an option shoals type of model to price their options. So I'm sure if they're putting this in the docs, it's probably not far off. So that kind of gives you an idea of what you're making per contract. So 60% of, yeah, exactly. Exactly. So, yeah, per month. Exactly. So, the option buyer will be in the money so long as the spot is less than the strike, right? So, I mean, wherever this thing closes at, if it's below your strike price, you're going to make money. So, if it's below 2,500 at the end of the month, then you will make the difference, right? If it's below. So, in this example, if it closes at $2,200 at the end of the month, and this guy's a fantastic trader, as you expected, then they'll make the difference. So, 2,500 minus 2,200 is what they're going to make. So that's $200, and they paid $60 to buy this option contract, this put, and so they will net $240 USD. Okay, so that's your outright. That's your usual, speculation on buying puts. Okay, and you obviously can do the same thing with calls. So if you want to make some big bets, I know you can go on this platform and buy the calls using the SSOV-C pools. Okay, so here is a writing puts as speculation. So in this case here, you're just going to be writing puts, and you do not want to get exercised. I don't want to own ETH below my strike. So this is what's going to happen. And I talked it through already, but now we'll get the numbers, right? Okay, so I want to basically have some cash, stable coins. I want to earn some yield in those CRV pools because I have dead cash anyways. Let's say you're just sitting in stables, right? So let's say you've sold all your crypto. You're sitting in stables. You want to earn some yield, right? So you're going to jump into CRV anyways because that's the blue chip in terms of the DeFi environments for stables. I mean for yield. You also want to boost your yield by selling options on top of it. Okay, so here you go. You expect that ETH won't be at 2,500 or lower by the end of the month. So you're betting that ETH is going to close above $2,500 by the end of the month. So you're going to deposit 2,500 USD. Again, fully collateralized, right? No margin. Now they are working towards the margin environment, but that's not out yet. I'll get to talk about that. Is that on the roadmap? Maybe it is. But that is coming up to make it more capitally efficient. So the vault takes that 2,500. It starts farming it on CRV, right? The Curve platform, and any put options that are sold, you get to collect that premium, right? And so if ETH closes above 2,500, that was your strike price, you get to keep everything. You get to keep the premiums from the option writing plus the farming yield. If not, you need to settle the difference with that option buyer. You keep the premiums and the farming yield, but if it, again, we said before, if it closes at 2,000, that's a $500 delta, then you're going to have to basically settle that difference. Last example, doing the exact same thing again, but this time you're going to be wanting to take ownership or buy ETH at that strike price. So it's exactly the same thing. So just a slightly different mindset. It's like you need to keep a little bit extra money on the side in case you do want to buy that ETH at the end. So let's say I really want to buy ETH, right, at 2,500 because I think it's a great deal at that point. So you're going to sell options, and that's basically that's the level you want to buy at anyways. So why not sell the options, right? Sell the options, collect the premium, collect the yield, and then if it does break below, if it does stay below 2,500 at expiry, then you take your stables and you settle, and then you get to buy ETH at that price, at that difference, right, between wherever it settles and your strike price. So again, these are the three different examples that you can kind of work with there. But there's a lot more you can do. Obviously, you can do more complex stuff, like you could buy or sell. Let's try selling first. You could sell various different strike expiries. Various strikes and expiries. Various different strikes. You can't do calendars yet. Calendar stuff is because you can only do one epoch at a time. You cannot do calendar stuff, so you have to stay within the same epoch. But you could sell the other strikes, right? You could even do a combination of calls and puts. So maybe, again, if you do like doing straddles and strangles, you could do straddles, long straddles, and potentially long, or not potentially, but you could do short strangles as well. Key thing being here, though, is that it's not that capitally efficient yet because there's no such thing as margin. It's fully collateralized, right? So it is a bit of a, it does take up a lot of capital. So I'm not going to talk about this because we're running low on time now, and this is just another example of how you could use. That's an example from Twitter. How you could use this, where let's say you already have a position, and you simply want to hedge it, but also earn yield. So I'm not going to talk about it all, but example being, let's say you earn CRV, so you own CRV. This could be anything, right? Maybe you own Bitcoin. Maybe you own Ethereum. You don't want to sell it, but you also don't want to sit through a big drawdown, right? Because you can see the market's tanking. So maybe you buy some puts on it, right? But at the same time, you buy some puts on it, but with the existing Bitcoin you might have, you actually might want to stake it somewhere and earn a bit of yield at the same time while you have that protection. So you're earning yield, and you got to protect the downside protection because of the puts. Okay, so that's kind of that example there. So I think moving forward, this platform has some very interesting potential because it's completely decentralized, and once it gets a little more capitally efficient, which they're working on now, And you have more composability. So once you're able to move between contracts without closing them out outright in that Atlantic style expiry, it makes for some very interesting potential there. So I think it's a kind of a novel take on option writing, and certainly I think it's something we're not going to see go away. I think this is going to get very popular as people get into this option writing space. Yeah, it's not so bad because if you're on Ethereum already, then going between ETH and Arbitrum is actually not that bad, thankfully, because they're on. It's actually not that bad. Because I think there's a pretty big use case out there for it, right? And maybe maybe option writing and selling isn't or buying isn't your thing, but maybe this platform itself might be interesting, right? Just as an investment, because if you think about it, everyone's looking for yield. Like the whole world's looking for yield right now, quote unquote passive yield. Right, like especially these long-term Bitcoin hodlers or Ethereum hodlers, they never want to sell. Like I have a portion of Bitcoin and ETH that I'm never going to sell, but it's just basically dead money, right? It's just sitting there. So what do you do with that? You try to make it productive and put it to work, and if so, how do you put it to work? Right? Do you put it into a DeFi farm where you can incur? Let's say you put it into like an ETH USDC or USDT pool. Maybe there, you can earn some fees on that and get a bit of yield, but also there could be impermanent loss, right? Which are the options? You can earn the yield, but the funny thing is that if you think about it carefully, this term impermanent loss isn't in the vernacular of option writers, but basically it's the same thing. So if you really think that ETH is going up in price, right, and you is it really a good idea to be writing calls on it? No, right? Any good option seller would tell you, yeah, if you have an outright idea around directionality, don't sell the options on it, right? So this is one of those things where you do have to be, I think people are going to get around to it. It's like there is no such thing as a free lunch anywhere. You do have to be a bit savvy because you all know there's a good time to be selling options and there's a bad time to be selling options, right? Can you be called away? No, you cannot be called away because you're going to deposit your, well, with the call options, no, you don't have to be called away because you're going to deposit the stable coin value of it. Well, actually, yeah, if you do deposit your coins, yes, you would have to make up that difference. You wouldn't lose the whole amount though, but you would have to make up the difference. All right, that would be the difference. Yeah, so you don't lose your whole stack, but you would definitely lose there. So there's another really good paper that I'll post alongside the Meetup notes, where a person ran the analysis and was doing the analysis on option writing as a strategy on ETH and Solana. And the strategy itself, so it's the very basic option strategy using these option vaults, where you sell, a certain delta every single month, right? You just sell it regularly, right? A certain amount of delta out of the money, and it has not performed very well. The reason being is because sometimes ETH and Solana, especially last year, they went on a tear, right? You didn't want to be selling calls. You know what I mean? Like it was actually detrimental to you to sell calls in those environments. You wanted to be holding on to them. So it's not unlike impermanent loss, where if you're staking your Solana USD into a pool and all of a sudden Solana triples, it wasn't great to be in that. You're going to have some serious IL there. So it's really it's no different. So again, just something to think about. Yeah, you too, Tech. Thanks for coming up, man. So yeah, we're out of time, so I'll begin to wrap it down. So hopefully you kind of get some. Yeah, so a question from John: is the main difference between Binance and KuCoin exchange the ability to stake while doing puts and calls? Yeah, and it's decentralized, right? It's also decentralized. The model being this is supposed to be easier, although you start thinking about it, you realize that you still have to be savvy because I don't think you can ever remove the element of timing. Like, I think that's the most difficult thing of options. I think most people can figure out the Greeks given enough time. I think the timing thing is super hard with options. I think that's the magic of options, right? Is if you can time things, then you'll be options god. But the timing is very, very difficult with options. So yeah, I think that's the nuance there. And one final thing, so just to wrap it up here. So that's DOPEX. We need better oracles. Yeah, we need real oracles. Exactly, not just like links, but we need like real oracles who can tell us where it's going to go. Another project to check out, I didn't talk about today, but it's one called Lyra Finance, Lyra. I was doing some research on that one. I have not used it myself personally. But Lyra Finance, actually a Deribit alternative, which is DeFi based. So it doesn't do these SSOVs. It's actually like Deribit, but completely decentralized. So if you don't mind getting your hands dirty and you want to be doing more sophisticated option strategies, then and there's a lot more strike prices and there's different expiries, so you can do calendar stuff and fancier option writing strategies. Then yeah, check out Lyra, because that is a completely decentralized options trading platform. All right, so we'll leave it there. Hopefully that was useful. So last the roadmap. So at the end of Q4, they released what we talked about today, the SSOVs, options pools. I do not see it yet on the platform, but that's supposed to come out anytime now. And then here, option strategy vaults. I think this is when it's going to get interesting, because once you can actually begin to create code around this, then you can get code, and their DAO is going to be able to implement some of these more complex strategies. So you can imagine, you're going to have a covered call strategy. There'll be, a put sign strategy. Maybe they'll have some a strangle straddle type of strategy. Maybe it's going to be, these kind of, condor strategies. We can pick, okay, I'm going to bet that things are going to, settle in between two certain ranges. And that could all be, once again, done through smart contract. And that'd be very interesting, because I think that'd be very interesting. And finally, insurance as well on some of these stablecoin pools. All right. So that's a wrap. Here's the resources. I'll leave it in the deck. We are at the end of our 2 hours here. So here are all the links that I went through today, some of the resources I used. And then finally, we have a Slack channel. So folks are still on the line. I think a lot of folks here are already part of the Slack channel. But if you do want to chat throughout the week between meetups, feel free to join this group here, MTL DeFi, on Slack, and I'm in there throughout the day, looking at the channel and sharing DeFi stuff as it comes through. Okay. So finally, we'll just wrap up here. Any questions or comments? And while I open it up to everyone, I'll just show one final thing. Okay. So just like we did last time, before you log off here, don't forget we're doing POAPs for this event. So what's a POAP? Proof of attendance. So hopefully you guys have done this already, or you guys are ready. If not, go right now. So open up your phone and download POAP. So go to your Google Play Store, or go on the iOS store, the Apple Store, and search for the app called POAP, Proof of Attendance Protocol. So that's what where's mine? Yeah. That's what it looks like. You guys can see that. Maybe not. I'm very close enough. Download that app, okay? Once you get to that app, you're going to see a button in the bottom right-hand corner that says Mint. I'm going to show you that in a second. Before I get there, make sure you click. You don't forget this word here, DeFi Montreal 2. That is the secret word, okay? So that's the secret word for this month's POAP. DeFi Montreal 2. All right? So don't forget that. Once you get there, these are the three screens you're going to see. Well, potentially three. So you're going to open the app. Here's what my POAP looks like, or my app. Click on Mint in the bottom left-hand corner. Click on Secret Word, and then type in our secret word, DeFi Montreal 2. and then you'll get our beautiful custom Montreal, DeFi Montreal Meetup 2 reward. And that's what it looks like when you have it on your phone or on in your wallet. Okay, so one of a kind, limited edition POAPs just for you folks who are on this call. So the POAP will be available for 7 days. So you have from now until next Thursday at, let's say, 6 o'clock to be safe. You have 1 week to claim it. All right, let me go through some of the questions here. Thanks, Marius. I'm glad you liked it. Awesome, Jason. Likewise, man. I hope it's in person sooner than later. I'd way rather be doing this over, a glass of beer or something in person and hanging out than over Zoom or whatever. Okay. Do you know how to transfer POAPs between wallets? I do not, but I know you can do it. If you go on the POAP site, John, I saw, looking at their FAQ, and I think I saw a link on that. So I'm going to ask you to look up the fine documentation around that. All right. Blockchain for this meetup? Or second. Awesome. All right. Secret word? Okay. The tough one. DeFi Montreal 2. You're welcome, Ross. My pleasure. So, if what I want to do, guys, so since everyone's it's being recorded and some folks have dropped already, but I'm going to send out this recording tomorrow, along with the PDF, and I'm just going to, for folks who are already here, I'm going to send out an invite in the next week or so for a discussion around DAOs. No, the DeFi one's already expired, Sandro. So that one's already gone. Unfortunately, yeah, expired after 7 days. This one too expires in 7 days. So I'm going to send out, an invite to have a discussion around DAOs. If you want to get involved, if you want to contribute, if you want to brainstorm, if you want to join this thing while we're, while we're in our infancy and see what we can all do together, then I encourage you to join and to get involved. And I'm really excited to see what we can do with this group because, man, I've said many times already, the design space, what's possible is I think it's phenomenal. So, anyways, how I reach out? I want to create an actual meetup invite. Like I'll do a meetup announcement. Like I'll make an event inside a meetup. But in the meantime, just keep your eyes on email, or feel free to join the Slack if you have any things you want to ask in between time. All right. Can we sell these POAPs? You could, but no. I don't think you can sell POAPs because they don't actually have a market that they trade on. So yeah, you could not list them on OpenSea and then sell them. So it's not like an ERC 721 token where you can actually list them on OpenSea. So these are more for you. More like a badge. All right? But the neat thing with POAPs is that we can actually begin to use POAPs in the future, right? So when we start talking about DAOs, why not award folks who have a lot of POAPs, right? So we can easily scan people's wallets and say, listen, if you have more than 3 POAPs, whatever the number is, right? Maybe give them a discount or enable the folks to have certain access to certain, resources, membership rights if you have attended a certain number of things, right? So yeah, it's a really fun space to explore. So I don't want to take up any more of your time, guys. I hope you guys enjoyed it. Had a lot of fun tonight. Hope you didn't get too bored of me yapping for a couple hours. But look forward to talking to a bunch of you on our next call. And again, reach out to me if you have any questions in the meantime. All right? All right, folks. Have a great night. Take care. And yeah, stay safe. Thanks, Pete. Appreciate it. We'll talk to everyone soon again. Bye now.